Welcome to Coverage and Clarity with Jacques, the podcast where we break down protection, planning, and peace of mind so you can make confident decisions for the people who matter most.
Welcome to Coverage and Clarity with Jacques. This is where we slow things down, remove the confusion, and focus on what truly matters, protecting the people you love with confidence and understanding. Now, today we're going to talk about a topic that often creates confusion: the difference between life insurance, burial insurance, and prepaid funeral plans. Now, these options are not the same. Understanding the difference can easily spare your loved ones unnecessary stress during an already stressful and difficult time. Now, why this matters? Well, when a loved one passes, emotions are high. The last thing a family should be worried about is how to pay for the funeral expenses or whether the right plan was in place. Now, unfortunately, many families assume that they're covered until they realize too late that their plan that they chose did not do what was expected. Now, I want to bring you some clarity today, and that's why we're here to discuss. So, what is life insurance? Life insurance is designed to protect your family financially. It could help replace lost income. Now, remember, when a loved one dies, their income needs to be replaced. What I always say, you should have a minimum of 5 to 10 times, sometimes even more years of replacement income for that loved one. Because remember, even though the loved one is passed, there's still bills that they had left. There's still bills for the household. There's still bills that need to be taken care of, such as the children's education, the roof over their head, food on the table. So this is why it's very important to have this. Replace the lost income. Pay off debts. Your mortgage has to be paid off. Your credit card has to be paid off. Now, the misconception that a lot of people have, they think that once they die, credit cards just go poof, that nothing has to be done about it. No, the credit card company still wants their payment. So whatever debts you leave, you want to make sure your life insurance covers that. Same with the mortgage. You want to make sure your family stays in the house. The last thing you want is after the breadwinner dies, that the family has to leave the home because they could no longer afford it. So this is where life insurance comes into place. And what I always say, if you have a mortgage, get a separate policy, even if it's a term policy for the 30 years that the mortgages will be in effect. So by doing so, you know that no matter what happens, the mortgage is fully protected. Any other life insurance policies will take care of everything else, from inheritance, leaving for the family, etc. So that's the very most important thing. Now, the main reason to have the life insurance itself is to cover your funeral expenses. I always say, do not have a crowdfunding source to pay for your funerals. Now, what is that, for instance? Well, I don't need to mention the name of the company, but basically, a lot of people do stuff where they collect money from other people to do that. I always say, you came into the world with dignity, leave the world with dignity. You know that you're going to have a funeral eventually to be taken care of. Make sure at least this is taken care of by your family, for your family. So this is the reason why you want to have your funeral costs covered. And even leaving a legacy for the next generation. For a lot of people, is the philanthropy of knowing that they left something in their name. Now, many people have done stuff where they leave money to a hospital, other organizations where their name lives on after they're gone. So these are all reasons for having a life insurance policy. Now, with life insurance, it offers flexibility. Your family receives cash benefit, and they decide how the money is used based on their need at the time. So whatever they feel is most important after your funeral, they could use the money for that. Now, this option is ideal for families who want broader financial protection. They're not tied into spending the money specifically on one particular item. This is why I always say, if you have different things you need to cover, whether it be the mortgage, leaving for the family to use for themselves, leaving for money to run the household, or any other purpose, have a separate policy for each. This way you know that everything's taken care of. So your life insurance will provide a lump sum benefit and a payout to the family. The beneficiary will be named, and the beneficiary is going to be the primary person or persons that's responsible for everything. So that is clearly listed out on your life insurance policy. Who's the primary beneficiary? Who's the contingency beneficiary? Now, the contingency beneficiary only comes into place if all of the primary beneficiaries are no longer around upon your passing. So this is why it's important to have both a primary and contingency beneficiary on your policy. As you know, the primary purpose of the life insurance is to provide financial protection and support the dependents and beneficiaries that are left behind after the policyholder is gone. This is the whole intention of doing this. Life insurance policies could vary in coverage amount, duration, and time. So basically, you have whole life policies that have a cash value. You have IUL policies that builds a cash value that the individual can use while they're alive and also pays a death benefit after they're gone. And you have a term policy. Now, remember, term policies only pay 2% of all the policies out there. Why? Because those 2% are the people who actually died while the policy was in effect. The other 98 either let the policy expire or did not die during the time period. So in that case, if they did not die, that's a very good thing. I mean, they're still alive. But you want to make sure that if you have a term policy, it does what it's intended to do, basically to protect your family for the mortgage, outstanding bills, for students who have college loans that are outstanding. You want to make sure that your co-signer has that covered, because if you should go before the bills are paid off, the co-signer is responsible as if they took out the loans themselves. So this is all reasons why we want to make sure that that's all taken care of. So the potential advantages of life insurance is the financial protection. As we all know, life insurance provides a death benefit to your beneficiaries upon passing, offers financial support to cover various expenses such as your funeral costs, mortgage protection, debts, and future income replacement. So by income replacement, that means that the money that you would have provided for the family is now replaced in your absence. So income replacement is your family's primary breadwinner is gone, and many people think the breadwinner is just the one who's working. Even with the one who stays at home to take care of this family, if they're gone, you still have to replace those services as well. So no matter which one, it is both parents who are working, one who's working and one who isn't, both should have their own policies for their particular reasons. Because child care, dependent care, and home care are all very important in everyone's life. You may think that the person that's there is not doing anything, but if they're not there, you have to get money to pay someone to do what they were doing for you. So this is why everyone should have their own policy, especially when the kids are involved. Now, with your estate planning, life insurance, and particularly whole life policies, can be used as a tool for estate planning. Now, estate planning is basically what happens after you've passed on. So the money that's owed to the IRS later on for your estate, meaning what you leave behind, your life insurance could pay that as well. So it gives you a tax-free inheritance for your loved ones. With that tax-free inheritance, it does everything. Take care of the funeral expenses, leave money for them, and as well pay off any estate plans that you may have outstanding upon your passing. Now, for the most part, the estate is due within 9 months after the person's passing. So now any money that's owed to the government because of that, there's now money for that. Now, if you own a business, you have what's called business continuity coverage. So you want to make sure that the life insurance policy could help continue the business if that's what you want, buy out the business, meaning that if you're no longer there, the other party could purchase your portion to continue the business for themselves, or you could use it for stuff like key person insurance. Now, key person insurance is for the person who's pertinent to your company's operations. This could be the CEO. This could be the person who manages day-to-day services for the company. So anything that's there dealing with the financial obligations for the company, your business continuity insurance will take care of that for you. Now, as you know, everything that has a positive has a negative, correct? Well, the potential disadvantages of life insurance, health consideration. Many people wait until it's too late before they get their life insurance. So because of that, they may be declined totally, or they get what's called a graded policy. I'm going to go into that in a little while on a graded policy, what that is. But basically, with the graded policy, what it does is it gives a person conditional protection if they live at least 2 years from the time of issuance. Now, you may say, why would I want that? Well, normally when a company offers you a graded policy option, it's because you would not have qualified at all. So at least it's giving your family a chance to make sure that in the event you live longer than 2 years and then pass, that you're fully covered. And if you should pass within the 2 years, they at least return the premiums paid by you to your beneficiary. So even though it's not your full protection, at least you know you were protected if something should have happened after the fact. So that's one way to definitely take care of that. So what I always say, try to get your policies as early as possible when your health is very good. Because as we get older, things happen. When are you the healthiest? That was yesterday. Because today and going forward, you never know what will happen. Your age, by the way, as you know, you can get a policy as young as 15 days old. So the younger you are, the cheaper the insurance policy is for you. Some people wait till like their 70s and then say, oh, you know what? It's now time to get insurance. Yes, you should still get it at that time because you could use it for your passing, but you should have gotten it much sooner where the prices would have been much lower. And of course, your lifestyle choices matter as well. Do you do risky things such as bungee jumping, mountain climbing, motorcycle riding, or a number of other things? I mean, I don't want to list any one in particular, but the lifestyle matters also when it comes to insurance, life insurance. You want to make sure that you live a risk-free life as much as possible because life itself is not risk-free, but at least you could protect that to lower your premiums that you have. So if you have existing health conditions, as I said, you will have higher premiums. And if you engage in higher risk activities, you will have higher premiums. Now, some people may say, I'm not going to tell the insurance company about this. Well, if it comes out that you were the type of person who did this on a regular basis, they could void your policy. The last thing you want to have your policy voided. It's better to list it at the time, pay the little upfront cost that they will charge you in addition to make sure your family's fully protected. Now, if you have a term policy, as you know, there's no cash value to it. It doesn't accumulate any cash value over time, meaning you don't receive any return on your investment. So if you outlive your policy of your term, that's great. That means you're still alive. But remember, only 2% of term policies ever pay out a death claim. The other 98% either expired or they were too old later on to get it because now if you have a 30-year policy, you're now 30 years older, thereby making it 30 years more expensive. Now, the next subject I want to go over with you is burial or final expense insurance. Now, burial insurance is also called final expense. It's a type of insurance with very specific purpose. It's designed to cover your funeral costs, which includes everything from the service at the funeral home, the funeral itself, the burial, everything. The cremation and burial that they will do at the cemetery or the services if you want to do that. And it also covers your medical bills or other end-of-life expenses. Now, many people don't think about it, but not everybody dies instantly. Sometimes something may have happened to cause them to go to a hospital, or they may get sick, go to a hospital there for a little bit, and then pass. So those medical bills, remember, they add up a lot per day. So the longer the person's in the hospital before the pass, that's going to be needed to be taken care of as well. This is where your life insurance comes into play to make sure that those amounts are covered. Now, with burial insurance, the coverage amounts are usually typically smaller, but the policies are more affordable and easy to qualify for. So for many seniors, this is a simple and dignified way to ensure their family are not left with a financial burden. So whether it be a small policy as little as 2,000, now you may say, what's 2,000 going to do? But some people out there, that may be a lot. Anywhere from 2,000 on up to 100,000, that's what your burial insurance is for specifically, for your burial purposes. To provide funds to cover the casket, burial plots, funeral, memorial service, and other related costs. It aims to ease the financial burden on the deceased family and their loved ones. Now, the advantages of burial insurance is affordability. Burial insurance policies are typically lower in amount, making them more affordable for the individuals who primarily want coverage specifically for their funeral and burial expenses. It's simple. Burial insurance policies are often easier to not only qualify for, it's easier to understand and to obtain compared to traditional life insurance policies. Now, the traditional life insurance policies, you may have to do medical. They have a paramedic come over to you where they take blood, urine samples, and then do that before they approve the policies, or other aspects of the policies to get that taken care of by going through the MIB, the Milliner report, etc. Now, the Milliner report and the MIB are basically looking at your financial histories in real time. So many companies will know what your history are, and that in turn will lead to the pricing that you get for your policy and whether or not your policy is approved. On the burial insurances, they usually bypass these items, therefore making it easier for people to qualify for a final expense policy. That leads to guaranteed acceptance. Now, many burial plans offer guaranteed acceptance regardless of the applicant's health, status, or age. So now, where they could not qualify for regular life insurance policy, they may qualify for this one. Reason being, it gives a specific purpose. Now, the burial insurance is designed specifically to cover funeral and burial costs, ensuring you do not burden your loved one with these expenses. Now, even though that sounds great, there are potential disadvantages of having it. First being limited coverage. As I stated, you can go as little as $2,000 on up. Now, on a $2,000 policy, that may not be enough. But think about it. If you already have a burial plot from a previous spouse who passed away, that $2,000 may be enough just to open the crypt, to put the body in, and to close out. So the limited coverage may be a problem for some people, but for other people, that may not be the case. The limited amount of money at least will cover or make lower coverage amounts than the traditional life insurance and what it's used for. So at least some money is provided. And I always say if it's not enough to the clients, tell them at least this is something that'll make it that much less for the burden on the loved ones later on. The cost effectiveness. Now, the premiums for burial insurance policies can be relatively higher than the coverage amount provided, especially if you're relatively young or in good health. So, therefore, you want to get the policies that's best for you at the time. And that's why it's good to work with someone such as myself who's able to work with multiple carriers and get the best pricing for you, not just the policy that's available, because the policy that's available may not be the best policy there. But yes, it's still good that you at least have the policy. Now, waiting periods is another thing when it comes down to policies. Now, the waiting period could be what's called a graded policy. The graded policy, as I mentioned earlier, is when someone has to wait before it pays out. So on some policies, you have to wait before anything happens. On other graded policies, what happens is you have to wait at least 2 years before they pay out the full death benefit. Now, you may ask yourself, why would I want something such as this? Well, someone who qualifies for a graded policy means they would not have qualified for a regular policy at all. So rather than be totally rejected for having a policy, the graded policy gives your family the opportunity to fully protect you as long as you live at least the 2 years past the time of approval. So it may not be the best thing for you, but it's better than not having any insurance at all. So this is why it's always good to do your life insurance policy as early as possible, because you want to make sure that you get the full coverage from day one. But at least in this circumstance, you have something that you did not have. Now, burial policies also, similar to term policies, it does not have any cash accumulated value. So it only pays upon the passing of the individual. While they're alive, they have no access to any cash that the policy would have accumulated. Now, if you find the advice I've given to you so far helpful and would like to inquire more about coverage, call or text me at the studio, 631 594 8118. Once again, 631 594 8118. Now let's continue on for more information on this. Now, as I mentioned, I was going to discuss what a prepaid funeral plan is. A prepaid funeral plan is very different. So with a prepaid funeral plan, you choose and pay for the funeral services and products and services in advance. It could include everything from your casket, the viewing, the funeral ceremony, burial plot, cremation if that's the route you choose to go, or other components of your funeral services. Now, funds for the prepaid arrangement are typically held in a trust or inside an insurance policy until the time it is needed. Prepaid funeral plans ease the financial and logistical burdens on the deceased person's family by ensuring that the funeral expenses are already covered. Many people, especially as they get older, want to make sure that the funerals are fully covered and they do not leave anything to any burdens to their family. This is where it comes very important, and this is what they're looking for. So what it does is it locks in today's prices, but there are limitations to it. The funds are tied to one particular funeral home. So what does that mean to you? If the funeral home goes out of business, yes, you lose your money. Now, plans for that, you may say, can I transfer to someplace else? That would have to be discussed in your contract, and you want it in writing. Because as you know, if it's not in writing, they could tell you anything later on. So you want to fully make sure that's all taken care of. But normally, the funeral is tied to that one particular location, unless they're a chain funeral home where they have multiple locations, but it's made with that one funeral company itself. So what happens if you leave the state, the area, the city, whatever, basically you're out of luck unless your family brings you back to that location in the event that the funeral home still exists. So the family doesn't receive any cash for any unexpected expenses that may occur, such as medical and all the other things that I told you that happens. So it's important to understand that prepaid funeral plans is not insurance and it does not provide financial flexibility. You want to find out now what's the advantage of having one. Well, with the financial planning, prepaid plans allow you to pre-arrange and prepay your funeral expenses. So at least this will relieve your family of any expenses and burdens and make it an easy decision during an emotionally challenging time. So as long as the company's still around, you're fine. If they leave, now that's something else that the family will have to take care of at a later date. Price protection. As you know, prices go up on everything every single day, every single year. By preparing for your funeral in advance, you can secure your future services at today's prices, thereby protecting your family from potential future inflation or price increases. So the funeral homes that do this take the risk of not having the full amount down the road, but they guarantee that the money is protected and given to them today so that at least they have that within their coffers of what they spend on the full services that they provide. You can customize. Prepaid your funeral expenses allows you to personalize your funeral arrangements based on your preferences, ensuring that what you want, your wishes are fulfilled at the time that you pass. It gives you emotional relief. Prepaid funeral plans can provide peace of mind, knowing that your funeral arrangements are taken care of as per your wishes. For many people, even after they're gone, they still want to know that their wishes are held up. This is one way to do that. It's an investment protection as well. Funds for prepaid plans remain in a trust or an insurance policy where the money is released only at the time of services. So, as I gave you the advantages, now the potential disadvantages of prepaid services: limited flexibility. Prepaid plans may lack flexibility if your circumstances or preferences change over time. Now, modifying the plan or obtaining a refund may be challenging as well. As you know, once you put a prepaid plan, whether it's a funeral or any other item where you prepaid in advance, getting that money back, it's not always easy. You're relying specifically on that one provider, or if they're a chain, at least the providers within their network. So you cannot go to any other network if you don't use them once you pay your prepaid plan. So you're relying on their funeral home, you're providing on their services. So therefore, what I always advise people, if you're going to go with a prepaid plan, it's essential to research and choose a reputable, a financially stable provider to make sure that when the time comes, whether it be soon or a decades from now, that your money is taken care of and your services are taken care of. In addition to having that done, you want to make sure that your beneficiaries know where all this paperwork is. Because if you pre-planned a funeral in advance and no one knows about it, then therefore that money is totally lost anyway. So make sure that whoever your beneficiary is, they know where all the paperwork is for this. That will prevent the potential loss of funds. So in some cases, if a funeral home goes out of business, mismanages the funds, people don't know that you have it, so therefore they don't go back to them specifically, there's a risk of losing the prepaid amount. So it's crucial to review all the terms and conditions of the plan. Make sure you know exactly where the paper is located. But more importantly, make sure your beneficiaries know where to find this as well. So if you transfer, relocate your prepaid plan to another home, may not always be possible. So just remember that, as I mentioned to you. Now, which one is right for you? Burial insurance explicitly covers funeral expenses. Life insurance provides broader financial protection to your beneficiaries. And your prepaid plans involve prearranging and prepaying for funeral services to alleviate the burden on your loved ones. So it's important to carefully review each of these options for the terms, coverage, and conditions to determine which best suits your needs and preferences. Now, what many families do is opt for life insurance first to provide the financial comfort and security. And then they add the prepaid funeral plan on top of that for those specific expenses that the individual wants for themselves upon their passing. So what you should always do is consult with your financial advisor or insurance professional such as myself, who can make an informed decision based on your assets, your needs, and your conditions. So here's the key difference. Life insurance and burial insurance provide money for your family. Prepaid plans pay for your services only. Now, flexibility matters because no two families and no two situations are ever the same. Remember that. So many people believe that prepaid plans are not the same as insurance. They are not, as we know. Burial plans are real coverage. Well, it is coverage, but it's not real coverage in terms of your ideal life insurance paying for what's there because everything is planned in advance. So as you can see, neither of these two statements are true. Each option serves a specific purpose, but choosing the wrong one could leave you gaps that your families did not intend. So the right choice depends on your family's needs, your budget, your health, and how flexible you want your loved ones to how much flexibility you want your loved ones to have in the future. It's not about pressure, it's about education and making decisions rooted in care and responsibility. Now remember, planning isn't about fear, it's about love. And when things are done properly, your family can focus on healing, not the finances that's involved at the time of loss. Now, if you have questions, want guidance to tailor your solutions, I'm here to help. Now, as I always say, this is Coverage and Clarity with Jacques, where protection meets understanding, and understanding leads to confidence. If you found value in today's podcast, please share this message with someone you care about. And if you're unsure whether you have enough coverage for yourself that truly fits your life, I'm here to help. Every step of the way, the phone call that you need to do is just give me a call. Now remember, I'm licensed all across the country, and so I'm here nationwide. Give me a call at the studios or text me. You can reach me at 631-594-8118. Once again, 631-594-8118. Until next time.